Morning traders, welcome to the Traders Lab. I'm your host Tom B. Thanks for visiting today. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time. Not sure what time zone I'm in. How about that? And this stream's about integrating Bookmap OrderFlow tools with auction market theory using the volume profile as a chassis in the intraday developing time frame. This is based on the business of trading using the volume profile uh, as a chassis to align structured trades on. And by a structured trade, I'm talking about having a trade plan, knowing what you'll do before the market gets there, and then if it qualifies based on your plan, which means it has a statistical edge that favors you, your job's to put the trade on and accept it's a random outcome. In spite of your attachment to outcomes, this is not a business of prediction or being right. And I know I'm going to say this many, many times, but most developing retail traders are controlled by their emotional state. They don't change how they behave in this environment, which is a random environment. So, what is the difference between a trade that wins versus a trade that loses? Well, if it has a statistical edge, there's no difference between them because they're all unique and they all have random outcomes. You can have 10 losing trades in a row, and emotionally, you're not going to be thrilled about that. But if you have a statistical edge over time, those dollars will flow across the table, if you will, to you. It's how casinos operate. It's called gaming. Uh, Casinos are not attached to the outcome. They have an edge, so they execute their plan, which is their games. And even though they pay the gamblers, they extract the dollars from the gamblers. That's the business you want to be in. So what you need to do is know what you're going to do and only get involved when you have an edge that favors you. Now, let's go take a look at the higher time frame. Now, I have to give you a little insight and a little thought. I came in today with shorts only, selling only, and I'm going to explain why. Now, the thing about shorts only doesn't mean that I don't take longs. It means I try to identify a dominant side and then align with it until it changes. Now, for me, it hasn't changed. I've been on shorts all day. I've had no longs. And I notice other traders in Trader Lab are going to take longs, which is perfectly fine, and post that the market is going higher. Now, I suggest to all traders, no matter where you spend your time, that you follow your plan in your time frame, because someone else may have a higher time frame view of where the market might go, but we're day traders. So if we trade rotations, which is basically what our business is, then I think it's important for the trader to establish the time frame they operate in and also keep in mind what always can happen and define change. This is the business of trading. So the trade plan is what guides you. It doesn't predict anything. This is a business of alignment, not a prediction business, not being right. And I understand we all want to be right. We need to be right to fulfill psychological needs, but that has nothing to do with the business. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. And welcome to all of our visitors in YouTube today. Remember, the Trader Lab is available to all of you, and there is no cost for it. You can use the link in the bottom of YouTube. This is about the business of trading, not predicting, not knowing. It's alignment. Now, don't forget, there's a Blue Jacket contest going on for the month of February. You still have time. What does it need? What do you need to do? Take screenshots of executing on Bookmap, whether it's sim, replay, or live, doesn't matter. Annotate them and donate them to the cause. And by the way, just as a side point, besides the coveted Blue Jacket, and I have one, it's very nice. Very cool. And besides that, you'll win 3 months of Global plus data, either stocks or futures for 3 months, absolutely on the house. So not only do you get that, and that's Global Plus, you get the coveted blue jacket. So think about that. And if you haven't done that yet, maybe you should. And if you're in Trader Lab, you should already be taking screenshots, annotating, and building up a library, because that's how this works. Now, higher time frame, then let's get into it. Now, let's talk about market mechanics. We have the Acapulco cliff dive, as I like to call it. Now, let's review. What happens when you have a sell-off like this? Then we can possibly, and this is on a Thursday, I think it was. Let me try to remember here, because we had the holiday. I get all thrown off with that. And then we anticipate that longs that are in here are going to exit stage left, possibly, and that we're going to get continuation sellers. The continuation sellers, and this is on the Friday before a 3-day weekend. Here's what's important. It's called market mechanics. You need to understand general retail trader behavior. That is panic selling, sell stops under here, late sellers in here, and on a Friday, if you're short, are you going home short? Just asking. Well, maybe not. So if you're short in this down in here, and we're short in here, if we come across the range, what's going to happen on Friday? Flattening out, right? So that's what creates what I call a short squeeze. And don't forget, we started out down first, and then we have buy stops all the way up, and then buy stops for these guys. Does that make sense? Now we come in on Tuesday. Monday was President's Day, no trade. What about the shorts that got squeezed out and covered for the 3-day weekend? What do? Continuation selling. Let me get back in. It's going to zero, Lewis. What do we know? Let's come back to what we know. This is a higher time frame level. We tested, and it created all this up move, okay? Too low. Where do we come when we test? Where it was too low. And what happens to the sellers who reinitiated on this day? To squeezeteria again. You see? Now you get your shorts. You take out the stops under here. And same as this. Now, what happens yesterday? Let's come back to the logic of market mechanics. Buy stops are here. Buy stops are there. And this is called value area high, which may or may not be material because this is sort of a trending configuration. But outside up here is something called the value area high. And this can be because 70% of the volume took place in here on this day. If I come back in here, what I know is it was rotational down here because we spent time. The outside edge of this volume, and this is what this auction thing is all about. What's too high? What's too low? What's fair? Which is there. High volume. Well, on this day, if I come out here and take the buy stops, thanks for playing, they get a coupon to the buffet, right? Then this is our next area, outside edge. So what do we do here? We open and we can't get, and this is yesterday, we can't get to the volume point of control. This is the retail price. So if this is too low, and who knows, then we can do what? Squeeze the sellers who then bang, bang, bang out to here. And what do we have up here? Remember the target yesterday? 23.75-ish. What's the high of the day? 23.75-ish. You can look at your chart. Now, number one, how do we know that might happen? Because it's market mechanics. How do we know it will happen? We don't. Okay? You're in the business of maybe. Maybe it'll do this, maybe it'll do that, maybe it won't do anything, maybe you know what, right? This is trading. Maybe. So what do I know? Let's come back to what I know. The retail price in this day where the highest volume was, where we spent the most time, is here. But this is my outside edge, so too high, and this is retail. And look where we close, all the way down here. And what else do we know? Most of the volume took place in where this yellow box is. That means the fair price is up here. Well, if I come all the way down and I close on the edge over here, what does that tell me? Maybe too high. Now, where was the last place it was too low? It's there. So what does that do for me? Now, here, let's go to our context grid sheets. What are we doing? We're opening in range out of value. If 70% of the volume took place in here and I open lower, I'm going to sell it because I've rejected this. Now, there's other traders in TraderLab who are going to be buying it. It's not right or wrong. It's statistical edge. So for me, I'm only taking shorts today. And other traders are taking longs. Isn't that interesting? This is what makes trading so interesting. And the other part of trading is time frame. If you're a higher time frame trader, you might be sitting long from down here and you're in your Barca lounger and you're going to ride these rotations because this might be too low. If you're trading intraday rotations as a day trader, then you have a choice. Trade long, trade short, trade both, trade nothing. For me, no longs today. And here's the reason. Because I'm rejecting where most of the volume is. So for me, and it doesn't mean I won't take out the current high of the day, but for me, I'm aiming for the low of the day. And it doesn't mean it'll do anything. Because if I get below here, then I have the possibility to come there, in there. So these are my potential targets for today, not a recommendation. The market is not on a schedule. It could care less about me. And I unfortunately have to say, doesn't care about you either. So I lost the chats again. Let me try to get them back. Again, if you're visiting in YouTube, thanks for stopping by. Please give a like. Let me get these back again. Okay, this is the RTH open. Now, there's no right or wrong. I take stops, you take stops. Let's get over it, okay? If you're not willing to take a stop, it's not right or wrong. It's a sample. So when you are trading, you are sampling the market and you're using a plan. Now, for me, this is the value area low. If I open in range outside of value, and I have settlement above me, fine. And these have statistical probabilities. That's all fine. So what I know is I've got resting liquidity up here. I have a ETH outside edge. It's called a low volume node. And I'm out here. So I'm looking for shorts. And I also trade the open, which I don't recommend anybody trade. And the reason I say that is because it takes a lot of skill, and I have problems in this. I take more stops here. Let me show you. So, RTH open. Now remember, I'm looking for shorts only. And the reason, let me give you the reason. This is the naked volume point of control. And it was a retail price that was too low. We left it behind. Yesterday's low is here. What's under yesterday's low? Stops. So what am I going to do? I'm going to take shorts to take the stops out and to get here because it was too low. I didn't get it yesterday. It's still on the hit parade. So that's where I'm going. Those are my first trades. And then everything else after that, unless the situation changes, is shorts only. So I have not had a long today. Now, this is called VPOC migration. Let me show you. Now, there's a couple things you need to think about. Maybe. This is the overnight volume point of control. It's the same as this, except this was left behind from the ETH. So this is the last auction. And there is approximately, since we're opening lower inside of range, a 80% probability we get there. All right, that's nice. Taking out the previous higher low, 87%. Let me ask you a question for this astute group of traders. Where do you think we're going? Yesterday's low or yesterday's high? 82% probability. There. I'm looking for there, and possibly if I get out under here to continue lower, which is my plan. Not saying it's a good plan, who knows. Then I have ETH higher low, 97% probability. Taking out the first hour's higher low, 98% probability. Oh my goodness. Getting to the overnight mid, 75% probability. I think I'm giving you the wrong, hold on. I'm a little off here, lower, wait. I'm a little off. Hold on a second. Yeah, they're not that far off, but you have to vet these for yourself. 91% probability we get the previous value area high or low. And let me show you where that is after I do this. Let me just get this done. You know, I'm not a good multitasker. I can prove it. Because my brain tends to just jump from item to item in holding multiple concepts, because when I'm trading, I'm already holding multiple elements in a vertical integration of time frames. So this is a sweep. So right here I have my new retail price, and what I'm looking to do is get short, right? Well, this says retail. When I break low, now I know I have my opening swing low here, and I come back up here, I get a sweep. I'm looking for a short to come to the opening swing low, take this out. I have this, which is disturbing naturally, and then I have this is my primary target. Let's see what happens here. Okay, so basically this is just a sweep, a short, opening swing low, scale, pull back, look at the symmetry. Where do we come? Too high. So what do we know? Too high, sweep, short, short. Now I took this, and I also know that I might come back and check the low. Now this sweep down here is the opposite of this sweep up here. This says, and all a sweep is going to tell you, what it does for me, it doesn't say the market's going down. It says the market might go down, and if I get a trigger, then I can jump on the trade. So, and the way the trigger works, I'm just going to show you a little idea here. So when I'm coming up here, I have no clue. You know, I'm the clueless. I always say clueless, but not ignorant. And it's random, so I don't know. You know, and if this holds here, and I'm taking a short here, which is where and I already know here, right here, because I broke below this buyer, and I have the sweep, and I have the icebergs, who knows. But this is the first suggestion that maybe in a micro, it's too high. Now, I don't have enough yet. I have a suspect right here in the sweep. Now, I don't know, you know. So take a short, and now I know I might come down here again, and if I can take this out, I can go lower. So that's what I did on this one. This one, I meant to say. So I get risk neutral, okay? And I'm looking back to come back here. Didn't get there, and then to come out the bottom. So that's my trade. This says higher. This is resistance. This is resistance. If I can stay under here, then I can continue. I get risk neutral, and watch. As they say, I don't know what they say, but it says trouble. So I get taken out. Now I'm looking again for shorts. Now remember the reason for this. I'm right here. because I'm outside of value. So everything I'm doing is based on this because we found an area in volume where traders weren't willing to pay it, and we've rejected what's above. So I'm just staying on the short mode, and I cannot see a long in my plan. I see other traders are talking about longs, and it's perfectly okay. But I'm a rotational trader, so I am trying to get in alignment. And here's another thing. Let's go back to the higher time frame just for a moment. And let me show you what today looks like so far, just so we can kind of get some perspective. Maybe not. Let's try some perspective here. Yeah. This is our value area. This is a high volume area. And the way the market tends to work is, I'm not paying that. Retail, high volume, different time frame. And where's too low? Well, here, I'm below it. This was my fair price. If I get below here, where am I going? I'm maybe going here. So this is my target. Now, it doesn't have to do anything. You know that. And it can also go here. So my trade for today was just shorts, right? And and it's not a right or wrong thing, okay? All it is understanding how the market works. And you have to understand how the market works, not what it'll do. It's an alignment business. So, when traders say it's going to do this, it's going to do that, that's not a good place to be mentally. That means you're predictive, you're predicting, and you have a vested interest to support your ego. You need to be right. Professional traders don't do that. Professional traders, what they do is they stay fluid and they align. And when information changes, they change. And if the condition changes and they don't have trades that qualify, they just wait until the right bus comes by. They're not, they're patient. They're not compulsive. They're almost passive, but they're not detached. They're still involved. They still narrate. And this is Trader Lab processes. And then whatever happens, happens. Remember, if you have an edge, all you're doing is executing the edge and accepting the randomness. That's really the way this thing works. There's nothing more to it, really, other than your emotional attachment. Okay, so this for me is resistance. What I get here is I get a sweep here. This is support. Now, right here, I'm looking at a short right here. Okay, so but I have a problem. I got this. Okay, so, and I got settlement. Hold on, there's one other thing here. What is this doing here? I think let me look. 97. Yeah, this is stale. Sorry about that. So I'm looking for the value area test to short. And this right here sets up a short for me. I take the short because of the test. And then I'm doing mean reversion to come back here. This is called mean reversion. It's the primary trade I suggest developing traders learn. And then I'm looking for it to take this out. And I'm also aware of this. So what I have is outside to here, and then I'm looking over here. And this is just mean reversion. All it is a reversion trade. And this is what I suggest traders develop. And I take stops, so let's not worry about it. This is my target. So my short is from up here. And I get VPOC migration. This was my target right here. And I'm looking for it to come down here, variable high volume node. And what it does is, and we test. Notice over here, we test and we move down. Here, we break, we test, we start moving down. Right here, everything's on course. Break high, problem. So right here, and now I have this. So I have, this is resistance. So my stop is up here, okay? And so my next scale is over here, and I think I posted this, and then this, to come back and test these buyers. So this is why this is a reversion trade. It's strictly a balance area trade. So most of the volume is here. So I can sell up here if it's in my plan, testing this. If it's too high, I can come back around and this is what rotational trading is. And we could still get directional. It can do anything, And look where we come. See? Right here. So I got out of this. I managed the trade. I got taken out. And this was my resistance. Let me show it to you. Because what do you think I did at the resistance? Right here. So I got taken out. I come up to resistance. I put the trade on again. This time I scale here, and I'm looking for it to break under here and to go here. I got a limit order sitting right above this because that's where my buyers are, you see. So it comes to the VHVN and I get taken out. Okay, so that's okay. Now I'm just showing you rotational trades. I'm not saying they're good. I'm just saying it's a trade. It's just a trade. So now I'm back up here in value area. So this is problematic for me because as long as I'm outside of value, I'm good on the short side. And I'm looking to take the low of the day out. That's my thing, and take out the first hour's low. So that's my plan. Doesn't mean it's any good. So VPOC migration. What does the language of the market say? Well, this is the retail price. Now let's look to something similar. Now, teeth start chattering. Why? Because I'm testing this. This is an issue for me because I'm, as they say, flirting. I know I have sellers here. I have this liquidity come in over here. So I know where my sellers were. I see this come back in the book. So that to me is like a little bit of a roadblock. I break low. This is my support now. So it could either do, so I got this is support right here. So right here I've got nothing to do. Teeth chattering, and I'm thinking, well, this looks like it's going to come through the range now. But here's where it changes. VPOC migration, break low, watch. This is a Trader Lab structured trade. Short here. Where am I trying to come? Back here into the VWAP and the mid. What do I anticipate at the mid? Mechanical retail buyers. This is what retail traders do. And maybe they're right. It's not a right or wrong. This is a short for me. And let me show you something similar so you can see there's a process involved here of interpreting the market. See this here? Break, test, that's a short, to there. So you know about that. Now I have this, which is resistance. If I get above it, it becomes support. Watch. Now I know, and I see this starting to come in. It's like, what's going on? And this is my key level again. As long as I'm not up in there, I'm okay. Look at the symmetry. Break low, short, short. There's the mid buyers. So this is a short and a scale. Stop has to stay out here. So risk neutral. Resistance is right there. Let's see what it does. What is this called? This is a variable high volume node. What is the language of the market? I'm not paying that. Shopping, guys. Where do I anticipate mechanical buyers? At the mid. What do I target? I can target this or the mid. Why? There's going to be stops at the mid and there's going to be mechanical retail buyers. And remember, it's not right or wrong. It's just plan. Where do I come back? too high. What is this aligned with? Value area low. If I'm outside of here, I'm pretty good. Sell. Where to? Scale again. So what do I have? A short, scale, a short, scale, and then trying to take the stops out at the mid. Thanks for playing. They get a coupon to the buffet, and where's my next target? It's there. Variable high volume node. This is where I was trying to go. You see how the market might work? Look at what it's going on. So you might be using all your indicators, and that's all fine. I don't use any indicators in the standard sense. I use measurements, but that's not a big deal. And the primary input here is participant behavior and order flow. Target, clueless, back up, right? You can kind of see it. So this is your mid buyers. This is your resistance. You can kind of see how this works. So I just want to show you how this might work. Now, time frame is really the big element in this. If I'm trading this and this, I'm trying to go here because this was too low. If it's still too low, I can come back to where it was too high, which is my value area. What might I do here, Tom? How about sell it again? Where am I trying to go? Here and then back over here. Watch. Too high. So this is all I've been doing all day, you know. Hold on. And these are structured trades. I'm not saying they're any good. I'm just saying they are what they are, you know. Oh. That's it. Back to here and looking for it to come out the bottom. That's been my plan all day. Is everybody tracking? Now we're current. Let's get into real time. Do you guys have questions? Now let's talk. What is this? If we're under what was support for this astute group of traders, where is resistance? Isn't it right there? This is another Trader Lab short. If you vet it, and I have over 90% probability to take out the first hour's high or low. Again, for this astute group of traders, which one do you think it might be? You see? Again, guys, you have to develop and follow your own plan. It's very important, not somebody else's. And it's good that everybody posts. But if it creates conflict, like you're thinking short and somebody says it's going up and the buyers are in control, maybe not. Maybe they're talking about a time frame that has nothing to do with what you trade, you see. So you can't take that and do anything with it, in my opinion, and expect to stay in the business. You have to take your interpretation and develop it, and also go through the learning curve and also accept the random outcome. I mean, in the end, it's all random. So write that down. There is this no being right. There is none. And it doesn't matter who you are or how long you've been trading. Length of time trading does not create proficiency. You could be trading for 10 years and never, be sustainable. And there's reasons for that. It is because you don't have a vetted process, or you don't have a plan that defines the condition of the market, and then trades that you vetted that align with the current condition. If the condition changes, you're not taking the same trades. Other trades are either qualified or no trades are qualified. And then you just sit in your Barca lounger till the bus comes. That's all this is. This is not keep busy and be right and fear. All those things are triggered. They have nothing to do with the business. They're the obstacles you bring. This is a short, not a recommendation, by the way. Going for a 90% probability, and then I have other targets down below. not a recommendation. So where do we try to go? Well, if I can get below yesterday's low and this is big. This is support. And this has over a 98% probability. So what do I do here? I trade to here because my buyers are there. You can see them. So if I take a short here, guess what? You see this come in? I got to do something right here. This is order flow. And why do I have to do something? My buyers are here. If I know there's, and there they are, you see them? Change. So the sellers are here, the buyers are here. Variable high volume node is here. Liquidity break is here, which becomes resistance, order flow structure. I think I messed that up a little bit. Let's try this again. So I can look at this, I can lean on it, this, I got to get scaled here because that's where my buyers were, and then either we're coming out the bottom with a 98% probability or I'll get taken out on a trailing stop and scratch or whatever happens, right? Are you guys tracking? How we doing in YouTube, guys? Very quiet up there. I wish I had an ATM in the basement. So how are we doing in YouTube? Guys, please leave a like if you're getting something from this. This is the Trader Lab, and this is about the business of trading. And here's the thing. What's the right way to trade? Can we answer that today? The right way to trade. How about this? Here's the answer. It's no secret if you're in Trader Lab. You have to isolate conditions. You have to know where the market might come so you can anticipate it. I know the market might come here. And if this is too high, the sellers are here. And notice the liquidity is here. Think of it like a hand. And what happens over here? I rotate up with the mechanical buyers at the mid. Thanks for playing. And all the stops are going to pile under here. We know that. Haven't you ever bought the mid and getting stopped out? Just asking. So this is too high. If I come up here and I get my sellers, and I can read my sellers against this. So right here I have my buyers, liquidity comes in, and I have micro high volume right in here. So when I see the break, and this is more advanced, I mean, you might not be able to get into this. I trade this. I know if wherever I get in, my stop's going there. Not a recommendation, because these guys are like putting a lid on the market. So then where's my stops? Under these guys. Thanks for playing. They get a coupon to the buffet. And I can either come here with the possibility of this, or remember where the fuel is. I trade in the fuel. The stops are here. And where else are the stops? Under here for the longs that are trapped. That's why it was only shorts for me. And I don't know, you know, I can't say, I'm not going to be critical of buyers, because if they have an edge, they are then extracting dollars because they've defined the condition of the market. But if they don't know the condition of the market, they're going to be out of alignment. So you have to define condition, and then you need to align with it. It's called context. So the context is the most difficult part of this, is understanding alignment and also narrating change. Anyway, shorts, you know. Where are we trying to go? Trying to get under here. You know, either we do or we don't. Whatever we do, we do. And this is a short, right? And where's our support? Wasn't it there? See? So now you can actually use order flow, and you have to, of course, learn what's going on, of course, and how to understand a foreign language. I kind of look at this I mean, I have to relate it to something, musical instrument or foreign language, So, and let's look at the behavior. What do I know here? My buyers were here. There's a sweep. There's my buyers. There's my icebergs. There's my icebergs. Where's support? Where were my buyers? If I sell this, I'm going here for a scale. Does that work? That's like 10 points or more. And then I'm hanging out for a 98% probability and the potential to fall out the bottom and continue south by southwest. Is everybody tracking? Is this make sense? Because if it doesn't make sense, I understand. Whoops. Sorry, guys. You're still conscious. Oh, good, 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 good. I try to stay conscious myself. So the way I operate is I trade levels. That's all I do. I let the market set up. I know what this means. If we're out of value, we're rejecting this. So when you come in with your plan in the morning, it's not what the market will do. It's what the market has done and what the language is. Now, the thing about the language is you need to become proficient because we have to execute as best we can with a minimum amount of risk, which means we have to overcome our fear and waiting for confirmation. There is no confirmation. It doesn't exist. How many times do you quote in your mind, I have to wait for confirmation? What is confirmation? If you sell this, let me pick, I don't know. Let's just say you sell it here, but you're worried, so you sell it here and you get stopped here. Is it any different from selling it here and putting your stop there? I'm just asking. So you have confirmation here and your risk is from here to there. Or you don't have confirmation. You have that more fear, but you can enter here with your stop there and there's your target. Which one is better? Here's what's better. Just a thought, okay? And I like to give you guys something to think about because this is a thinking business. You have to be aware and conscious of yourself. You're wiring the impulses that are going to come. It's a protection mechanism, the saber-toothed tiger, all that jazz, danger. So we are wired, to avoid danger or pain, right? So your brain has been trained. Don't put your hand in the fire. Okay. A stop is painful. Well, let's not take stops, right? Well, guess what? You're going to take stops. Doesn't matter. So instead of avoiding the stop, you actually have to turn it around and accept the stop. So I've always mentioned here in the stream, and you guys probably don't really know why I say some of the things I do, but as you become more aware of the psychology, and that's the biggest obstacle, I believe anyone who comes to Trader Lab does the work and learn how to trade. So the psychology is the biggest impediment because you're just going to respond to behavior, your fear and your emotions. You're not going to do what a professional trader does. A professional trader is detached from the outcome and sees it more as a random sample. And the edge they have in their plan is what delivers the potential profits, not the outcome of one unique event. So when we take a loss, let's say on the last trade, whatever it was, and we get stopped out, so next trade we're going to put our stop out here because we don't want to get stopped out, right? That's not the way this works. That's emotions. So the way to get control over your emotions is to learn about them and then anticipate them. So when I put a trade on, I'm doubtful. There's a voice in my head saying, except I'm past the point of I've found out for me that that voice, that fear, has nothing to do with this business. It has to do with the emotions I bring to the business. The casinos are not fearful when they deal the cards. They're just working on their probabilities of the yield. Well, you need to put yourself mentally in the same place. It's just a probabilistic business. Notice the resistance. So risk neutral, right? Stop up here and say Laguerre. I don't know, what does say Laguerre mean? Laguerre doesn't sound like a good word. Should be say la vie, such is life. So I'm looking to come under here at some point. Doesn't have to. It can come all the way out the top. Not my job. But what do I know? I'm outside of value. I've gotten a key level right here. So this is an obstacle. If I can't get below this and below this, I could still come back across the range. Anything can happen. So that's all I can tell you. So we get above here. Then this is over. Then the possibility is to come back there. So let me ask you, if you took this trade wherever, here, and you got a 10-point rotation, does that work for you? Now, it might not be what you want to do, I understand, but can you create a profitable process in spite of the random outcomes that over time can create sustainability for you? What do you think? Please give a like if you're visiting in YouTube. What do you guys think? So you notice we're trading rotations, right? Does your plan accommodate rotational trading? And the rotational trading, and this is something I always suggest to developing traders, there's one condition in the marketplace that if you take the time to understand and learn it, you will get a lot of samples, a lot of trades. You will learn market mechanics in multiple time frames. And it's called mean reversion. Mean reversion is outside in trading. That's what this is. Outside in. Outside in. Outside in. It's called mean reversion. Outside, back up here, too high, back here. Break under here, next level. Come up here, too high. Come back here, looking for it to come down. If too low, then what? Rotate up. Get above here, nothing to do. Now we're looking for this squeeze. Stops are over here, stops are over here. Where's my fair price? It's here. If I'm on the dominant side, which for me is the shorts, I'm gonna cover my short. I'm gonna just do whatever. As they say, the fly in the ointment is this. So I have to get below this for extension. If I can't get below this, then I can come across the range and squeeze out the shorts. It's one or the other, right? Is this making sense? How are we doing in YouTube? Guys, is it logical? You guys have questions, please post them. How are we doing in YouTube? Everybody conscious? Be sure to give a like if you're visiting. By the way, they're in the Trader Lab while we're waiting for this to ferment. So you guys know, and it's available to all of you. There's no cost for it. This is the Trader Lab. There's a lot going on in here. Charts posted, mutual support, statistics, data mining, tons of stuff going on in here. Levels, behaviors, a lot. Okay, and questions naturally, and either I answer them when I can, or other traders. So it's a leveraged community. The other thing that is useful is our library of webinars. Ned, thanks for curating this for us. The primer webinar has over 36,000 views. This talks about the business. It talks about creating a plan, and it talks about anchored inputs, not random inputs. Most of you start out with indicators and random inputs. That's noise because randomness cannot be measured. We have randomness as soon as we push the button. Up to that point, you have control over what you do. You need a fixed input, whatever that is, rules that are fixed, so they're consistent and then they're measurable. And then it's locations, triggers, trade management, that kind of thing. Here, Meet the Trader Lab. This is an advanced trader education or methodology. It's not complicated. Remember, what's complicated for us is randomness and uncertainty, not how the market works. The thing about the market is we can't predict what it will do and where it might or might not go. We can only align with it. Separating pros from gamblers. The holy grail of trading, how close can you come? Obviously, there is no holy grail. Day trading, fantasy versus reality. Stop gambling, start winning. Trading in multiple time frames, getting aligned. Day trading, why most traders using indicators fail. And there's a lot more. Order flow, trading high volatility reports, understanding squeezes, and much, much more. And you're all invited to the Trader Lab. So this is available to you. And again, Ned, thanks for taking care of this for us. So use the link in the bottom of YouTube if you're inclined. Okay, we're back to balance. What is this called? Reversion. So where's the outside? It's out here. So now we have to come back and remember there's stops above here and there's stops above swings. How does the market work? Market goes up to go down, goes down to go up, goes up to go down, and if we find too low, goes down to go up. Why does it go up? Because there's buyers in here, buyers in here, buyers in here, buyers in here, buy stops. So now when it comes back up, and as long as we're out here, I'm going to be looking for continuation shorts. Now the caveat to all of this is this, because this might be too low. And look where the low of the day is, you see, wherever it is. I think it's right here. So if I know that and I got under yesterday's low for the stops and I don't get additional selling, it is possible. And possible is all you got, that this is too low. We got the low of the day in and now we're going to squeeze. It's possible. So I'm aware of what's possible. It's always possible. So this has a possibility, and it is about a 68% probability to get there. Now, is it going to go there? Great question. I don't have the answer for you. So, because I can't answer that. That means I'm predicting. So I can't predict. So let's watch. We want to watch this behavior, and we know there's stops here. So let's just see what it does. If this is too high, and there's liquidity, so there's a seller there, there's the iceberg. This is now micro resistance. I can do the following. I can come out here, or right here, I can come back there. It's one or the other. Now, this is not a short. This is just market mechanics. I have stops sitting over here. So if I can come up here, I want to see if I get a sweep or whatever. This is also a potential short. You can see it. Now, depending on your plan, you might not take this because of this. Okay? So this is trade plan specific. What is your rule? I always look left because I don't want to step in front of a swing where I know there's stops sitting. But what I do know is I had this and I have sellers and absorption. So I can come back here. That is what I know. Now, I don't call trades. Whether or not you would take this is plan specific. For me, this is my concern. So I don't take every trade unless all the pieces align. This would be a short for me if I got up a little higher and I'd be coming here. Just saying, okay? Because I'm trading multiple time frame reversion. Reversion is, this is reversion. Coming back here would be reversion. Coming there is reversion. Multiple time frames, you see. Is this making some sense? So let's watch. This is the target above here for a short. Let's see, and this is market mechanics. Watch how it works. Now, I am reading behavior. Now, this trade, remember, the stops are there. We didn't get them. So, I'm a tourist. Doesn't matter. If it doesn't meet the criteria, and this is a short, remember, and there's the scale. And then either you fall out the bottom or you're going to come right back around and squeeze. Let's see what it does. Can you guys see how this might work? So the way I operate, and it's just me, it's not a recommendation, I always suggest in TraderLab that traders learn to trade one side. It doesn't matter which one it is. It matters is that you can slow yourself down and anticipate locations. When you have structured trades, you already know where the locations are. You know where the locations are. You know where the locations are. You know where the locations are. Not saying you should be doing anything. I don't call trades. Now, I might take this trade. You might not take the trade. But when you're developing, you need to stick to one side, and the most common behavior, and I know I repeat this, and I'm going to keep repeating it because of FOMO, most traders don't even understand why they do the things that are not in their best interest. And that is learn reversion trading. Because this is the day trading. This is the business of day trading. It's rotations. Now the concept, think of it this way. Let's go to multiple time frames for a moment, if I can do this. How does the market work? The market goes down to go up, up to go down, down to go up. Now the problem with up and down is which one's going to win in this auction. We're outside of value, which has me on the shorts. This is a high volume area, which says too high. This is too high. This is too high. This was our target for yesterday, remember? So what do I have? This is too low. So I got too low, too high, too high. If I clear this, maybe that. If I can't get below here, I can just rotate. So pick a side. And as Dirty Harry, says or said, do you feel lucky? Well, do you? It's random. What are the top up arrows with a numeric? I don't know. I guess you're referring to Bookmap, right? Are you talking about these up here? Greenhorn? Near the ice. Oh, near the ice. I'm not sure if you're asking about these. This is the liquidity marker. It shows that 145 were added here to what was in the book. So there wasn't zero in the book. 145 came in. 35 came in here, selling icebergs. Notice the iceberg, 647, 25. And remember, that's not the full order. That's just what they're showing. That's, as they say, the tip of the iceberg. Big seller. Buyers are here. More selling there. Selling, selling. Look at the buyers down here. What's up here? The sellers. What's over here? The liquidity. Where would the scale be if that's your trade? It's there. Why? Resistance becomes support. If I get below support, then I come down to the next one. That's how complicated this is. It's process. Ilya, the thing with going long, going short, when you flip, then you got to stop because then you're not in alignment. And you should be on one side only. Again, I suggest all developing traders maybe derive some benefit from my experience. I'm doing this 47 years. I've trained a fair amount of traders over the years, run a trade desk, ran my own company, was a fund manager. What I'm going to tell you is this. If you're flipping, that means you don't have an edge and you're gambling. The only way to extract an edge is to slow down, pick what you perceive to be a dominant side, align with it, but don't take the other side. Just trade with the perception. If the context changes, you will not have a location potentially for alignment because then you're out of alignment. And then you have to wait. If you define the context as having changed, you have to wait for a structured trade that's vetted. If you're flipping and flopping, that's just FOMO and that's gambling. So anybody who does that, by the way, we've all done it, so don't worry about it. The thing about it is you're in the trader lab and everybody's in the trader lab to change their outcome. And the way to change your outcome is not do what doesn't work. Again, it's just an opinion, but I have a little experience behind my opinion. So I'm going to stick with my opinion only because of what I've observed. And what I observed in myself. I mean, I've done everything you guys have done. Everything. And because of all the years I've been in this, tons more of stuff that doesn't work, but has random winners. So when you want to build a business from the ground up is what this is. You come to Trader Lab. I've spent the years, and so have others in Trader Lab, learning and making errors and not understanding the business I was in, trying to squeeze the risk out, responding to FOMO, looking at my P&L. I don't look at my P&L. I'm not interested in my P&L. My P&L is the output of following a plan with a statistical edge. It's not the next trade or the one after that or the last one. It's all of them. And as long as I have an edge and I understand market mechanics and follow my plan, I can take this, my stop would be there because it came in. It skews the book. This came in. It skews the book. This is order flow. Now, and then this is in here where we interact. Is that a trade for you? It might not be. Maybe it's a trade for me, maybe not. Not important what I do. I take stops. You got to get over it. It's overhead and cost of production. And I'm speaking to everybody, by the way. If you can't handle overhead and cost of production, how are you going to be in business? Right? What business doesn't pay bills? You know what I'm saying? Is this logical? So what do we know? I know that's too high. I know this is support. That's what I know. Let's watch. You see this over here? Look where this came back in. Watch the behavior. I already know this is behavior, so I could lean on it for shorts. I know I have longs here. There they are. If I have resistance, what happens to resistance? It might become support, right? If it becomes support, I will scale. Why? Because I'm reading the market. So I already know. Whoop. I'm trying to extend this so you could see, but I think you can see it. What do I know? I know I got to scale there, and here because of this and because of this. So if I take that, I'm going there, right there. Scale. And, what is that? 5, 6 points. That's what I would do. Then where am I trying to go? Here. If I get here, then where am I trying to go? There. Over 98% probability. And then out the bottom. It's my plan. Not saying it's a good one. It's just the one I got and I'm sticking to it. I don't know anything more than anybody else. I can't. So what I know is, and here's what's so important. I know how the market works. I don't know what's going to happen, right? So if I understand how the market works, even though I'm going to be out of alignment and take stops, I already accept it. Every time I put a trade on, I accept I'm going to take a stop. Why would I not? Mentally, I've already put myself in a place of, what's going to happen here? This is a structured trade. It has an edge. I wonder if it's going to manifest itself this time or if this is where I pay my bills. Detachment. So, do you want to be long? Do you want to be short? Were you long or were you short? Are you completely confused? Welcome to trading. Confusion, you should not be confused. Believe it or not. What you should be is accepting randomness and identifying behavior that you anticipate. If it happens, great. If there's change, then you go, I guess I'm out of alignment. Well, now I can't take any more shorts. I have to wait. If I can't get back into value, which is what I went over at the top of the stream, where am I going? Maybe down here, maybe not. So now, where am I? I'm getting below this. If I can stay under here, that potentially puts me on for this. Let's see what happens. This is method, process, still random, but language. This is like learning. How do you learn this, right? I know. Took me a long time because I was too hung up on being right, indicators, and all this other garbage. And it is garbage. No offense to the indicator crowd. They're garbage, in my opinion. Does that sound a little too direct for you? You don't have to agree. I build trading systems, indicators on steroids, and with optimization and which is a curve fit, of course. And the current market is not the last market. The last rotation is not the current rotation. So when you're trying to tweak and tune and then replicate it walking forward, if it doesn't have an edge, you're going to be a loser. You're going to go out of business. The other part of it is that everything has random winners. I call that trader Groundhog Day. And that was me. I have all these winners, but I'd still leak equity in spite of winning weeks and all that. Because even though think about it this way, gamblers have winning hands, right? They don't have the edge though, the house does. Now gamblers are going to walk away with some dollars, that's fine. But the house gets the dollars from the gamblers over a random distribution of samples, So they don't control the outcome. How can you? You see? You have to learn the business. You got to learn what makes this difficult emotionally, and then you got to deal with that. It took me a long time to do that. And I can tell you that conscious intention goes out the window when these chemicals are released in your brain. It's an impulse to do behavior, to move your stop away because your ego, you need to be right. Or you get a counter rotation like this and you don't have a trade management process, and now you're going, what should I do? All the answers need to be in your plan, not here. You bring your plan to the market, and then whatever it does, it does. It's like, this is a curiosity. What do I have? A sweep. What does that suggest? Counter rotation. Sweep, right? What's down here? Let's look a little further. Let me try to find this for you. Trying to find something for you. I can't find it. I just want to show you sweeps. Something simple. Not complicated. Simple. I think it was all the way back here. Notice this is important. You got to screenshot this because this is where your buyers are. Okay. Here's this sweep. You see the liquidity in the sweep? That sets out the potential reversal. You see the sweep up here with the liquidity? That sets up the reversal back to there. This is support. This sets up back to there. This is the mid. Buyers are here. Resistance is there. Support is here. Doesn't quite get there. Resistance is there. These are all shorts going here, going here. Buyers are here. Sellers are here, right? What about this thing? I got a sweep. What does it suggest? Counter rotation. What do I do about this? Short here, scale here, then either back here or come back across. Trade management. Next. You guys with me? Is this making sense? This is just a plan. It's nothing more. I'm not saying it's a good one. Who knows? But I'll tell you, it's mine. And it's not necessarily a good plan. It's just a plan, What do I do with a fake out, Jim? Well, I'm not sure what you mean by a fake out. If I take a trade and take a stop, maybe that's a fake out. I don't know. I just take my stop. My objective when I put a trade on is to look at where the opposite behavior might show up, which is this, you see, and a sweep. This tells me potential counter rotation. Now, my process, right here, I have choices. My stop is either up here, or if I can't get below here, I'm coming back across. And it's not a recommendation. I don't know what it's going to do. But I can tell you, I absolutely would be risk neutral here, right there. And then this says counter rotation. And either I'm going to break below this again, or I'm coming back here. That's what I know. Okay? A normal day, which is what they call it in market profilage, is where you don't take out the first hour's high or low. There's a 98% probability that we'll take out one of them, and it seems it's about a 4%-ish probability not to take out either. Based on the condition of the market, I'm voting for a taking out the IB low and continuing. Sometimes I always suggest, now it doesn't mean it will, what I always suggest to traders, what is the number one input? It's something called context, condition. What is the market doing? Is it going up? I don't think so. Do I want to get long? Not now. Not ever today. And so then what? I'm working at 98%. Now, I know this is important. This is a big deal, okay? If I get below here, this, then it opens the door. and I'll show you where it opens the door. Hopefully. I think it's 26. And it might not, just could do whatever it's going to do. Let me come back and show you why. So you understand this is a high volume node. This is a higher time frame version of this. If I get below this and this becomes too high, then I could go to the next high volume area. So what's happening is, if this is too high, yesterday's retail price, then I can come back to this, the previous retail price from day before yesterday. We just missed it by a hair, which makes this a very important level. If I get under here and I can't regain this, that's my plan. Not saying it's any good. I'm just, I don't know. Everybody, all these influencers, and I can't speak about all of them, I'm going to say most of them, are not going to give you the straight oil from the can. They're going to talk about the one thing you need, the only setup. I see this stuff out there and I just cringe because it's nonsense. You guys, if you've been there, done that, that's Trader Groundhog Day. Jump from chat to chat, guru or educator, whatever they are, influencer, and where are you? If you're in the same place, then don't keep doing it. That's Trader Groundhog Day. Wake up, work hard, wake up in the same place. That was me. So at some point I went, this isn't working. So I had to do something about it. Now this is very important. So again, no longs for me today, only shorts. Doesn't mean it's good. There's not a right or wrong. It is alignment. Remember how the market works. This is a business of alignment. And when you get out of alignment or you get caught in a rotation you take stops. That's it. Okay, we're at an important location now. Let's watch. IB, I believe, yes. Now, we have to be very careful right here. What happens right in here? And this is important also. I have this labeled. So 50, I've got this. If I come out here, come back in, that would be potentially a trade management opportunity. If I keep going, I'm looking at this. It's if this, then that. If this, and I come back in, then back there potentially. If not, then what? Then potentially here. I've got two targets. This trade would be called, if I come back inside, it's called the IB failure. I made it up. These are some of the trades I share in TraderLab. Not saying it's any good. It's just behavior. What might this say? Language. If I come under this low and get the IB, which I believe we did, yeah, then I can extend to here, next target, or come back inside and come here. That's what I know. Doug, I thought you were on the long side. That's what you posted. Did you change? Because you posted that it was longs. So where did it change for you? So we have to watch this here, and if we come back inside, remember, then they're here. Not a recommendation. So this right here is a trade management opportunity. Just saying, for me, not for anybody else. Now there's a choice here. You can take a long here, which is counter trend to come here, or you could just be done, subject to your plan. Again, this is called the IBF. There's two trades here. One is potentially continuation down lower or back there. Two trades. And you have to follow your plan on this. So the last short, subject to your plan. If you don't have a plan for it, was here if it's in your plan. Scale here. Liquidity comes in there. If we don't get above there, then where are we going? The IB over 98% probability, and then either south of the border. If we get under here, then we can go south, or we come back above here and we can come here. It's one or the other, and it doesn't matter which one it is, because one of them might work or neither of them work. But these are structured trades. Let's see. This is a key element. Let's see. Buyers are here. Buyers are there. Support is down here. This is very important right here. Okay, so you got all these levels, and we have to see what it's going to do. So you have a potential long up here, and since we're out of value and we're out of range, what does your context grid sheet say? What is the context? What does your grid sheet say that I've shared in TraderLab? Doesn't it say shorts only? So if you look at your so there's two trades here. One is the IBF, which will go there, and the other one, since we're out of value and out of range, is a short continuation trade, not a recommendation. And where are we trying to go? 26. Or wherever. You know, it's trade management. I don't know. Look at your context grid sheet. What does it say? Did we open in range and value? No. What does it mean? Market out of balance. What do we anticipate? Overlapping or balanced day, which is what we got. Are we breaking out of the prior day's range? Yes. What does it mean? The market's moving out of balance. Trade in direction of the breakout. The market's rejecting the former interpretation of value. That's it. So my shorts all day were based on the value area being rejected. Now we are under here. This suggests potentially lower somewhere. Okay? Shorts, shorts, shorts. Unless it becomes a long. You see? Is everybody following me? This is kind of important. Can you see the logic? Now, I always have to stress, this is not a right or wrong business. This is an alignment business. And the market can do anything. It's nothing more than that. What do I know? I now have resistance here and here. So we tested into yesterday's range. Too high. I'm not paying that. Now we have other areas to try to clear. So now it's strictly trade management. Take shorts until it changes. If I come back inside and I get over this, then I'm back here. If I don't get over this, and this is where my resistance is, I gotta watch. Let's just see what happens. Not trade recommendations. This is the business of alignment, not prediction. And when you get out of alignment, because the rotations are random, you'll take a stop. How are we doing in YouTube? You guys conscious? I'm always worried. Well, Spoodini, you can manage your trade whatever gives. You have to measure it to see which process works better. I tend to use high volume because what is this? That's the retail price from here. Let me open this up and show you. If I come outside and now I'm back inside the IB, then I don't have anything. I'm going to get taken out, right? Because this is really the last place. So this is like an outside edge of this be now here, let me draw this for you so you can kind of see what's over here. So I draw or look, I can see behavior, but I'm always looking across. So I'm looking like this, you see, to there. Now what? Well, what else do I have? I got this. I can keep my stop above here. I'd be risk neutral. So, if I get taken out, I'm still going to have a profitable trade based on my trade management. Out here is an outside edge of this auction right here. So all I have to do really is just take shorts or stay short and put my helmet on. I don't know what's going to happen. Does anybody know what's going to happen? DM me because I'd like to know. When it comes to trailing stops, it's a statistical thing, not an emotional one. So I use structure, and sure, I get taken out. And emotionally, if I have this much MFE on a runner and it comes back like this, I'm not a happy camper. Here's another thing: if it comes above here, I can cover and then put it back out over here because it's in my plan. So I can just grab these pieces. It's time frame specific. And I want to be very specific about this. Other traders are going to sit short from out here and they're just going to ride around. I'm a little bit more this kind of stuff. From one side primarily. It's just easier, you know. So I'm concentrating. I'm not going, oh, should I get long here? Oh, no, it's the brain is going to get exhausted trying to do that. So if I'm sitting, and remember the context grid sheet, everything says to me short, right? Now this down here is going to be important. Let's see what it does here. And I'm going to show you why. Actually, I'm running out of time, right? By the way, if you're visiting in YouTube and you haven't taken advantage of the Trader Lab community, there is no cost for it. There's a link down there. All you got to do is confirm your Discord username so we know you're not a spamulator. And it's a serious community. It's about the business of trading. It doesn't matter how long you've been trading, how you do it, what you do. It's not about that. It's about you determining whether you're waking up, working hard, waking up a trader Groundhog Day, or what. And if you keep waking up in the same place, you might have a defective process. It's not your intent. It might be that you're trying to solve for the wrong thing. Yeah, Matt, congratulations on writing out the runner. Good for you. Just make sure you have a process to manage the runners, accept the outcome, and just hang in there. And let it do whatever it's going to do. That's what I do. I go, well, this is interesting. What's it going to do? I don't know. Do you always hear me say, I don't know, and clueless? I say those things to myself because I'm speaking to myself to remind myself that I have no control over anything after I push the button. The only thing I have control over is myself. And I either give up that control to fear and greed, or I keep the control and just manage the trade because the plan already has the decisions in it already. The randomness of the market is what I have to operate in. But the plan, I never have to ask what I'm going to do because the plan answers the questions before I have to ask them. Anyway, thanks guys for visiting Trader Lab today. Hope you got something out of it. Every day is unique, but the process that I share in Trader Lab is the same. Market's unique. Process and plan is the same. That, in my opinion, is what can create sustainability. If you don't have a sustainable process, you might want to come to Trader Lab. It may not be the solution for you. You're going to have to change your beliefs, and that's not easy. So the invitation's open. Please give a like if you're visiting in YouTube. It support the channel. Appreciate you stopping by. Also, Trader Lab, thanks so much for all your support. It's very much appreciated. And I'll continue doing this as long as I can. But my time doing this is limited, so it's one of those things where if you haven't come to Trader Lab and you're interested in it, I would suggest you do it sooner rather than later. Thanks again, guys. Look forward to seeing you tomorrow. Follow a plan, build a plan, know what you're going to do, discover who you are in this environment. You cannot bring who you are here. You have to adjust who you are when you're in this environment. Thanks again, guys. Don't forget to like. Look forward to seeing you tomorrow.